Hey, welcome back to the channel, Fully Invested Phi Labs. Today, it's going to be a meaty portfolio update. So we're going to go over the last 3 weeks of updates for the portfolio since haven't done one since like the October update. And yeah, it's going to be a big deep dive in the numbers, especially with the recent downturn this past month. So yeah, it's I'll show transparently how the portfolio is holding up. And honestly, it's not pretty. Yeah, so before we get started, let's look at this strategy recap here. So I'm not going to go over this full chart just because I've gone over it in a lot of other videos. I'll link a deep dive of this chart on the top right there, so you can look at that. But just as a quick overview, you can kind of see this flow chart of like how I invest 100% of my paychecks every month in both growth or capital appreciation, and then also high yield ETFs for income. So I don't use a traditional bank account anymore. I fully live and pay bills out of my brokerage account with margin. So the idea is that I never sell any of my assets to pull money out of the account. I just borrow against the full market value of my account. Similar to like a HELOC in a way on your home, but I'm doing that with my stocks instead. The loan is collateralized against all my stocks. So yeah, if you want an in-depth breakdown of this, you can watch it at the link above on the right. And yeah, trying a new format for this of not deep diving into this. Let me know if you missed the usual breakdown of this. But so just let's dive right in. Oh yeah, and quick thing as well. I have to give the disclaimer. This video is for entertainment and educational purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. All I'm doing is simply sharing my personal investing journey and really just documenting my own results for people to see. And whether it fall in my face or not, or yeah, you have that morbid curiosity. So yeah, investing always carries risk, especially when using margin, and may result in the loss of principal. So please do your own research before making any investment decisions. No returns are guaranteed. So yeah, let's dive right into the portfolio. So it is not pretty. So Friday we eked out a bit of a gain because like all the dividends dropped in the same time. So yeah, up 0.14%. And yeah, the overall portfolio value is down to $139,703. So yeah, it's come down a lot from where I was at a month ago, really, when I was like nearly at 160. So like on the week was pretty brutal, lost over $12,000 or 7.91% on portfolio. Over the month, I'm down $13,400 or 8.75%. On 3 months, down nearly $12,000 or 7.9%. So yeah, you can kind of really see the dangers of margin here. Like it works great on the upside, but it also works on the downside, right? It works both ways. So that's why I really don't recommend margin to most people. It is very volatile. It is a roller coaster, right? So you have to have the stomach for this. So yeah, definitely don't recommend it for most people. And year to date, yeah, I've just kind of eked out into the negative, at least since I've transferred into Robinhood. But yeah, I think if you look at the history before this, just slightly positive, but just barely. So yeah, pretty rough. Just basically lost all the gains I've made since July, since this portfolio got transferred over, which is unfortunate to see. So you can kind of really see the stuff started since like October and then just kept dipping and dipping and dipping. And even like bought the dip like here and then it just kept dipping and then dipping some more and dipping some more. So yeah, it's a lot of red the last couple of weeks. And yeah, again, I'm showing this transparently. You can kind of decide for yourself whether how my performance is going. It's not going good, I think. But yeah, that's where the portfolio is at. So yeah, you can kind of see like the margin numbers here, and we'll actually dive into this more in my sheet. I think it's a little bit more clear and a bit more accurate. So yeah, and actually before that, we can kind of just look at the performance here on Snowball. So like, yeah, you can kind of see how I'm trailing the S&P by like 5% here or 7.5K, trailing it by 9% or 13K over the month, 9.7 or 13.6K over 3 months. On 6 months, I'm just positive, so you can kind of see here. And yeah, just that sharp drop from the dip, right, and amplified by margin. So I've kind of just reached like where the S&P would have been at. And year to date, yeah, I've just crossed down, right? So yeah, you can kind of see how like, yeah, it was kind of out down as it was going down in the April dip, but then kind of have like bounced back up. And then now it's kind of going back down here as it's downturning. So yeah, you can kind of really see the roller coaster of margin here. So you really got to be careful if you are using it. And over the year, yeah, just negative as well too. So yeah, that's where the portfolio's at. And that's why it's kind of nice doing these weekly updates. So you can kind of really see the real performance, like good or bad. I'm not trying to hide anything. This is just where things are at now. And we'll see how we bounce back from here, especially as I invest into the dip and such. So yeah, if we swap over to my investment sheet here. So I made a couple changes the other week. I actually added the margin here just so it's more clear that like, yeah, it goes from like a market value. I have the margin that's used, and this is the net margin value instead of having to keep scrolling down. So you can kind of see the clear correlation there. And yeah, so you can kind of see, a lot of red that's popped up even in the total return column now on the high yield side. And honestly, this is the same thing that happened back in April as well. A lot of red showed up here, but as things bounce back, a lot of this got back to green, which was nice. And then also, the overall unrealized gains on the portfolio have dipped into the red for the first time in the last couple of weeks. So now I'm down, if you go off the market value, 3.87% or $11,000, or nearly 8% if you factor in the margin. So yeah, you'll notice that this is almost double given like the 50% margin that I have. So, but in total return, I'm still green. So if I factor into dividends, I'm up 44.3K or 15.45% or 31.71% if you factor in the margin. So you can kind of see what's kind of getting dragged down and what's kind of holding up. So clearly WPAY took a big dip here. GOW is holding up great because Google has been doing amazing. NVDY is still holding up as well in the green. HOOY is just down. Robinhood was hit hard this week, but it's actually at a pretty nice price now too, and I think it's just under, or just a little over my average cost per share. So might have to maybe add to Robinhood because I'm still a big believer in it, and then also it's like, its fundamental hasn't changed, and even given all the macro stuff that's going on. So, and then YMAX is still in the green, which is nice with total return. ULTY is 13% in the red, even with total return. So just keeping an eye on that. BTCI is still in the green with total return. And then Misty is a big one that's failing, 26%. So this has just kind of been getting hammered the last few weeks and last few months, really, just as Bitcoin has been dropping and like crypto in general has just taken a dump over the last month. So yeah, these two have kind of like gone down quite a bit. So yeah, crazy unrealized gains here. But yeah, for now, not selling. I'm just going to keep collecting that income. I'm like, I'd say about a little less than halfway to house money when you look at the dividends here. Same for NVDY. So yeah, just gonna keep collecting these dividends because actually given the volatility, it seems like the dividend percentages has actually held up for Misty. NVDY, not so much, but yeah, just gonna keep collecting that income for now. I don't think I'm gonna be realizing any of these losses here, despite the dividends that have gone. So yeah, and then if we go over down to the allocations, so in growth, I'm down to 151.8K or 55%, so still 55% allocation here. And for the income side, it's 123.7K or 44%, or just under 45%. So yeah, you can kind of see it's there. And the overall value of the portfolio is at 275.6K. So you can kind of see that here, right? So if you kind of add up all the assets together, that's what it is. And then you factor out margin, and this is the net equity value that you see in Robinhood and such. So as far as margin health, so I've been kind of keeping a close look at this given the downtrend, right? So yeah, my equity is just above 50%. So basically, in the last month or so, the bonus that I invested has basically just got wiped out, like what I put into WPAY essentially, given the downturn, which is unfortunate to see. But yeah, having put that in, that kind of had boosted my equity to like 52, 53% the other week, and that portion has basically gone erased, but still up to 50% now because of that. So my margin maintenance is down to 71.7K. And actually, I noticed this week too that ULTY's margin maintenance requirement has actually gone up. So yeah, so you can kind of see it here. It's 35% now. It used to be 25%. And I had a few people in the comments warn me about that when it was going down under $5. Like a lot of brokerages apparently, once it reaches that threshold, they kind of start raising the margin maintenance ratio. So I was keeping an eye for that in the last couple of weeks. And yeah, it finally happened, given that ULTY's like at $4 now. So yeah, luckily Robinhood didn't jump it like crazy. I know I've heard of some other brokerages that jumped it to 50% or even 100% when it drops past that dollar threshold. So yeah, that's, I think, one of the many reasons also like YieldMax probably did that reverse split to kind of help correct that. So maybe once the reverse split goes into effect on December 1st, maybe I'll see this drop back down to 25%, hopefully. Because really that directly affects the margin buffer, right? And the margin maintenance. So these two numbers. So yeah, the lower my blended margin maintenance is, the lower the higher my buffer will be. So this took a bit of a hit given that push up of the margin maintenance, right? So yeah, so my margin maintenance is at 71.7K. My blended margin maintenance went up slightly, so it's at 26.05% now. Before it was like 25.50, I believe. And yeah, my margin buffer is down to $67,922. So really, my margin buffer, if you go off the net portfolio, is 48.62%. So this is what matches roughly what's in Robinhood over here, right? But I think the important number to keep in mind, and because I think like honestly, this is a little bit misleading from Robinhood to kind of go off this number, just because yes, that's the value the net portfolio has to go down to, but like really because of margin, you're really amplified by this market value number, right? So what happens is that if your total portfolio value, the 275K, goes down 24%, that's the equivalent of a 48% drop on your net portfolio, right? Because of the margin. So this is the number ultimately I keep more attention to, and that's why I highlighted this in a highlighter green, just because, yeah, if there is a market drop of 24%, that's when my portfolio get margin called. So that's what this is the big one I'm keeping an eye on, right? So yeah, if this gets like a bit too close for comfort, that's where I might maybe inject more capital here. Maybe I'd pull money from the HELOC to pay off some margin to help line the load and create more buffer and things like that. But yeah, with that's kind of giving me currently a buying power of $63,976 or just about 31K of cash available for withdrawal. So this is like not quite accurate in Robinhood, just because if you look at the cash available to withdraw, so if we go to spending over here, you'll see that's 31,845. So this is a bit mismatched because basically what happens is that it's basically this number minus any interest that you owe already for margin. So they minus that out. And that's what makes it so the cash is available for withdrawal. So, but yeah, at least it gets you a close number there because I don't want to keep adding the interest due month to date. But yeah, that's where the margin health is right now. So definitely a bit lower than I'd like. The equity at least is above 50%, which I'm happy about, but the margin buffer has definitely gone down because of the ULTY maintenance change and also because of the market dips. So yeah, hopefully this will kind of go up a little bit once I invest my paycheck later next week. And also we'll just be keeping an eye on it. So we'll see how these dips keep going, but like, yeah, it might be a case where like if it gets into kind of critical territory or where stuff where I'm feeling a bit more uncomfortable with stuff, like maybe there might be paychecks where instead of investing it, I may just pay down margin instead, right? Help bounce things out a bit. But for now, I'll just keep investing because I want to get into these dips. So yeah, that's where the portfolio is at performance wise. So yeah, let's look at one last thing in Snowball Analytics. So we'll just look at all the dividends I've received over the last month. So we'll see that month to date, I've made $3,933 in dividends. So yeah, if we kind of go over there, can kind of see how the chart and how this has been growing, especially since May, since I switched the strategy. But yeah, there's all the dividends that have come in. And yeah, if we check on them, so yeah, I've getting quite a bit now. Practically getting paid every day of the week except Mondays, and then sometimes not on the Thursday. But yeah, the overall definitely a good month in dividends. Like we'll see. Yeah, by the end of this month, it actually might be a little bit lower than last month. Yeah, just given like all the turbulence and like, yeah, WPAY not paying as much as it has when it was kind of doing 65% or whatnot, and ULTY taking a bit of a hit as well too. But that's how it's looking like from week to week. So yeah, you can kind of see here. Yeah, here I got like a little bit over 1.2K on the first week between all of these. Over here, got a little bit over 1.8K. Or 1.7K between all of these. And then on this week, I've got a little bit over 800 on this week. So I'm not going to go over each one. I feel like that's kind of taking up a lot of time, but you can kind of see all the dividends here per week, right? And how the yields are holding up. Yeah, actually, I wish these yields were more accurate because they kind of just base it on the last week that happened. So this number week to week doesn't actually hold up there. But yeah, for this week at least, yeah, got GOW, and this will actually be better next week because I made a couple buys into this week with some YouTube earnings. WPAY was at 46%, so there was a bit more of a dip. ULTY is still at 83%. I feel like it was a little bit lower than that if you looked at their thing, but its payments have gone down, I guess. Yeah, it's definitely gone down a little bit since like the beginning of the month, right? From 278. YMAX at 203. So YMAX actually has been holding up like relatively okay over the weeks. Definitely lower pain this week. HOOY kind of staying relatively consistent, and Misty has been staying relatively consistent. Actually, it's been kind of like in the 80% range, which has been nice. And NVDY has stayed, yeah, had a bigger one at the beginning of the month, and then kind of just stayed in the more 50% range here. But yeah, that's what I got this week and for the month so far. So yeah, doing okay. Not going to be a record-breaking month like October was, but that's okay. We'll kind of see how stuff progresses from there. So yeah, that's the dividends. And yeah, at least Snowball is projecting out 5.3K a month roughly. And yeah, you can kind of see how it's going from month to month there. I recalculated stuff on my sheet as well today. So mine's coming in a little bit higher. It's estimating 5.9K a month. And this dividend yield here, so this is based more on just the capital that's invested into the high yield asset. So the 123K of my portfolio. So that's why I want to see like how much exactly, like as I'm putting money in, like how much of the yield my income will generate, right? So yeah, so you can kind of see here. So the difference is that the full portfolio, if you go off that, it's 26%, but if you just go off the high yield income assets, it's actually 57%. So yeah, just between all these high yielders, right? Between like WPAY, ULTY, YMAX especially, and some of the more stable ones like XPAY that are lower and 20%, those kind of roughly nets out to 57% yield. So yeah, that's where the income is at. So I'm like, at least if this holds up, I'm actually well above my normal paycheck, which is great. So that's kind of like one milestone reached. So hopefully we kind of keep at that level and keep going. But yeah, so that's where the portfolio is at. So a bit of a deep dive there for everything. Again, I just want to be transparent about all this stuff. It's nice to show it on the good days, but yeah, these last few weeks has been pretty bad. You can kind of really see all the red, and yeah, just the consequence of using margin, right? It works both ways. Can't forget that. And yeah, so on that, it's like, yeah, overall, it was like a really tough month on the portfolio. But as I said in the last video that I put out this week, it's not shaking me out of the market. If anything, just because I've been through downturns like this back in 2022, and really like I've kind of course corrected and adjusted my strategies over the years. But yeah, I'm more excited than anything to invest in next week's paycheck in this dip, right? It also just serves as a great stress test of the portfolio to kind of give a rough idea of how the portfolio might perform in a downturn and how it may or may not rebound from it. So I'm sure there's going to be a lot of learnings that I can glean from this as we kind of move through this period. So as I kind of come to those conclusions and learn about stuff, I'll definitely be sharing. But yeah, if I make any adjustments, I'll definitely be letting you know. But I think this is a good reminder too. One of the guys on the Discord, Foxhound, who's pretty active, he shared this great chart. And I've seen this over the years too in different ways. But yeah, I mean, this is a good chart to see, especially for the US market at least. Like this would be different if we looked at the Japanese market, for example. But as far as the US market and S&P 500, it's like, yeah, it just keeps going up to the right despite all the crazy stuff that happens. And there's always crazy stuff that happens every year, right? So it's like you can kind of really see like .com crash here. That's just like a small blip in the chart. Global financial crisis over here with all the mortgages going crazy, and it's just kind of keep going up. So there's always something happening. But that's why, like for me, I just want to keep investing in the market, and I don't want to miss any of these upswings over the year. Time in the market beats timing the market, right? Yeah. Over long periods of time, especially in the US market, like you end up being positive in overall returns. So, but yeah, again, not investment advice. This is my personal opinion on all that stuff. You have to make of that what you will for your own stuff. But personally, yeah, I just want to participate in this continued growth in the market and the overall S&P 500, right? And yeah, as far as another topic that I wanted to talk about today, so yeah, recently I've seen a lot of hate and just like people dunking on SCHD, and that's come up. I've just seen on Reddit or on YouTube or whatnot. Yeah, because like its performance hasn't been great the last couple of years. It's been lagging like the S&P 500 and such. But really, it's like that stuff is kind of to be expected because like when tech is going crazy, value stocks aren't going as crazy. So it's like it's in times like, and then sometimes like these in the last month or a couple of weeks, right, where like people are rotating out of tech and getting back into value, and that's where SCHD thrives a lot. So like, for example, in 2022, so if we go to this little back test that I did, right? Yeah, in 2022, it held up great because like tech was down 22% that year, which was crazy. And I know a lot of people got rattled by that. But if you look at SCHD over this 10-year period, right, this is a year where SCHD outperformed because tech took such a dump that year, right? You can kind of look at it here. And yeah, before that, it generally follows the S&P pretty close, which is nice. I think where it really diverged was really in the last couple of years with the AI craze, right? So you can kind of see it here. Pretty much at this crossover point in 2023, mid-2023, where tech and AI just went crazy, and then SCHD is still going up, granted, but just not as much. But with that, it's like, it's at the end of the day, an 11% CAGR, which is really good. And like, I mean, before the AI craziness, like the S&P was probably closer to this 11%, or like anywhere between 8 and 11%. Yeah, SCHD, I still love, and it's a staple in my portfolio personally, and I think it's a great hedge, right? And also what's great is that you have the income. So like the same, in this case, it's like $10,000, but like you can kind of see how because of the dividend growth, your income just keeps growing year over year. So I personally just keep drip on for SCHD, and I just kind of want to keep this compounding going for it. So this is definitely one of my safer yielding ones, but I don't consider this like a high yield investment. This is more on the growth side of my portfolio. But yeah, I had like a comment that came on like yesterday from Stickwar God here. So what he said, what if I told you that SCHD on margin is hurting you because you're paying more in margin interest than the yield you get from it? No real benefit of buying SCHD on margin. And yeah, so I answered that with a couple things, right? For SCHD, given that I'm dripping it, I'm not considering part of my high yield income investments, right? I look at its overall CAGR as more of a metric. So given that like the CAGR that I showed you here, as far as it being 11%, over the last 10 years, it's still a 6.25% spread on the 4.75% margin interest that I get, right? Again, 11% CAGR is still pretty amazing and close to what VU has been at before the AI craziness over the last few years. At the end of the day, I still think it's a good value hedge in my portfolio, given how heavy in tech I am. So I love having it in my portfolio. On tech down markets, like I see SCHD holding up much better and kind of acts as a good anchor in the portfolio and doesn't have a lot of the same stocks that the rest of my stuff has, right? Yeah, and then also I did want to mention too, on that note, is you might have noticed in my portfolio that monthly put insurance is gone. So I've actually stopped doing it for now. I didn't like how much I had to manage it like every month and the monthly kind of dollar burn it had to it. Given that like, yeah, over long periods of time, right? Like the market is mostly green. There's definitely like red years or whatnot, but like as you kind of see here, it just kind of generally keeps going up, and on the S&P 500 at least in the US. Can't speak for other countries, but yeah, since I'm heavy into SHD and it's like uncorrelated to tech, right? It's, yeah, I like have a 42K in SHD out of my 275K, right? So yeah, it's a 15% allocation in my portfolio, which is pretty big. So yeah, I think it acts like a bit of a hedge in my portfolio already, given that it's more into value than tech, and then has like a lot of positions that doesn't have any tech positions really. And yeah, I think it acts as a bit of a hedge and almost acts as like a bond in a way in the portfolio, but it has more dividends and more interest growth built in. So yeah, it's actually not really a fund that I see a lot of other people that live out of their brokerages use. So I think I can kind of take advantage of it in that way. So, I don't know. Honestly, yeah, if anyone has any other ideas of like good hedges that are a bit more low maintenance, I'm all ears. But yeah, at least for now, I didn't want to keep doing the monthly put insurance. Like, because when I was going to go roll last month's ones, I was noticing the prices were almost like double what I paid the month before. Probably headed into this this downturn. But yeah, I funnily enough picked a funny time to drop out of my monthly put insurance because it was right before the big dips we've gotten over the couple of weeks. So yeah, just wanted to give a note on that. And yeah, I love SCHD still. So you can kind of see it in my portfolio here. It's my biggest position in my whole portfolio here. So I think it serves as a great anchor, personally. Well, bringing back the finance video of the week, it's been a bit. But yeah, I wanted to bring up a video from Joseph Carlson After Hours. He's a guy I've been following for the longest time, ever since I started watching finance videos in 2021. And yeah, really in the spirit of kind of staying fully invested and keep investing through the dips. Joseph highlights some good companies that haven't been down in the recent year. And yeah, he always does like great due diligence on stocks. And yeah, and I think his outperformance on his portfolio, where he just uses completely single stocks, super admire how well he's done buying into like the crazy dips that we've had in 2022 and just how much that stuff has gone up, like for example with his Netflix position. So yeah, definitely give his video a watch, and his channel between Joseph Carlson After Hours and the Joseph Carlson Show. He has some great stuff there. Like I think the foundation of my portfolio before I got into the high yield stuff is like probably due to like watching a lot of his videos and some others where I built a good foundation and built good stuff into growth and ETFs there. So yeah, definitely worth a check if you haven't checked out his stuff. And also, like, I always talk about him when I look at my Qualtrim stuff as well too. As usual, as we're wrapping up here, yeah, you can kind of follow me on a couple places outside of YouTube. So yeah, you can follow me on Snowball, kind of see all my trades here that as they happen. You can follow me on Snowball as well too, for free. You can kind of see all those numbers that I was kind of showing you, how stuff breaks down into my pies between my growth and high yield stuff. All my real numbers, kind of see all the green, all the red, a lot more red over the last few weeks, but you can kind of see the full total return of stuff. Nothing's hidden, just I want to be transparent about everything. You can also follow me on Patreon. I post all my YouTube videos that are coming up, on any new ones on here. My full backlog is in here as well too. In case there's ever any more shenanigans with YouTube, there's a backup repository with everything. So you can watch all that for free, same as with YouTube, so you can join for free. And then there's also a little paid supporter tier here, and it's really mostly just to support the channel if you want to chip in and get some satisfaction there, but totally optional. You can just join for free and watch those same videos that are on YouTube. And then also there is the Discord, as I was kind of showing earlier. Yeah, we're kind of pushing 150 members strong, which is great. And this is completely free as well. Again, like, I just want to try to keep everything free, everything transparent. I'm not trying to nickel and dime people. Yeah, I don't want to gatekeep at the end of the day. So yeah, lots of great conversation here. Like, yeah, Foxhound's chart that we're going over here. And yeah, just go back and forth on a lot of the stock stuff. Like, Brent always does some great DD as far as the market gap downs and pull-ups and stuff. So yeah, a lot of great stuff. We have other YouTubers in here as well too. But yeah, that is the video. So if you got satisfaction out of this and some value out of this, please consider giving a like and subscribe on either this channel, Fully Invested Fi Labs, or the main channel, Fully Invested Fi. And again, I'll be back posting on the main channel at the end of January, just because as I figure out the safe titles on this side, on this new channel, and safe thumbnails. And yeah, and as I wait for the strikes to expire on the main channel. So yeah, you can just find all my new videos here on Labs for now. So I'll catch you on the next one. Next week, I'll be doing another full paycheck investing video. And yeah, look forward to that on, yeah, probably Friday or Saturday. And yeah, you're going to see what I invest in for the dip next week. So catch you then. Bye.